The mid-caps and small-caps have certainly done well. 0.9% for the mid-cap index, 0.8% for the small-cap index. So that space is doing well, as a result of which the market breadth has stayed rock steady for a better part of the trading day today. Look at that. It's just kind of look very, very strong. It's not come off materially. Yes, off from the really high gap of the morning, but still doing okay for now. So no complaints whatsoever. Now, let's pull up the heat map and show you what's moving and what's not on the index. And the advanced decline ratio on the Nifty 2 is looking very strong. PSUs continue to power ahead. So look at Coal India, look at Power Grid. Very strong moves there. BPCL in the list of the top gainers as well. But some of the others have made a comeback too. So after a long time, you see Bajaj Finance out there in the list of the top 10 gainers. Some auto and some IT presence as well. The surprising thing is HCL Tech, which was the top gainer at the start of the trading day, is just up about 1%, and stocks like LTI, Mindtree or some others have actually taken center stage. On the losing side, Britannia yesterday was doing well, today not quite. Mahindra and Mahindra yesterday was doing well, today not quite. But FMCG seems to have taken a bit of a back spot today. But no real pattern on the index, even on the PSU names, just 3 out of the 10. Yes, 3 stocks there, but 3 out of 10 is not necessarily a pattern. So on the large caps at least, there isn't too much of a pattern, but for the fact that the FMCG space has looked wobbly in trade. The broader end of the spectrum though, Hersh, in the morning was peppered with stocks which I haven't seen for a long time in the top gainers list. How does it look right now? Hersh, I think they're losing out audio. So let me try and get the BSE 500 up on the screen and just show, maybe that will have some housing finance stocks. Before I toss to Hersh, let me just show this. So look at the list of gainers. So Aptus Value, housing finance, certainly out there. Well, Suntech Realty maybe up 7.5%, doing okay. Not housing finance, but housing at least. But the list of gainers, like I said, it's interesting. Paytm is the top gainer. Think about it. And then Privy Speciality, after a long time, you're seeing this guy come here in the list of the top movers. Aptus Value, after a long time, you're seeing this guy come in the list of the top value. So that's the mix that I was talking about. But Hersh, you were talking about housing finance being right up there. Any particular reasons?
Well, yes. The first piece of policy announcement in terms of the focus on housing, etc., has kept some interest of shareholders in some of these names, Awas, Home First, as well as Aptus as well. So some of those names in focus, and we'll talk a little bit more about that even later on the show. Let's pull up something like an Aadhaar also, and let's see also what an India Shelter Finance is doing. So some of those names really doing well in trade today. Also, let's pull up a HUDCO, because that one also a direct beneficiary, though not doing too much today, and NBCC also on that theme. To try and figure out as to whether that one is doing well. A note from UBS has kept something like an ABB in focus, a CG Power up 1% as well. Some of the cap good plays and industrials in focus on the back of that note. So some of those names in focus. Let's also pull up a Krishna Diagnostics on the back of a research report and initiating coverage report by Systematics. 841 being the target price for Krishna Diagnostics, up 5% in trade today. Again, we'll try and cover that on the closing show. BL Kashyap is down despite an order win. Dollar industry is pretty much flat, so nothing much to talk about. But some of the IT names outside of TVS supply chain, that one is up 5%. Let's pull that one up actually. That one is definitely the stock of the day, up 5%. Let's pull up some of the IT names, LTI, Mindtree, HCL Tech, Wipro. Pieces of news with regard to both new order wins as well as new products, keeping some of those in focus. Also, lots of action on the bulk deal and block deal front. You have IRB Infra up 2%. Block deal yesterday, 1.5% down on Interglobe Aviation. Again, a block deal. TCNS 1.4% up as well, and Action Construction up 1% or so. So plenty of things, plenty of pockets to talk about. Niraj, also the real estate pack under some bit of pressure today. So plenty to talk about, Niraj.
Well, let's talk about that with our experts. Ruchit Jain, CMT lead research analyst at 5paisa, with us on the charts. Ruchit, great having you. Thanks for taking the time out and being with us. How are you dissecting the trends today? Are you taking any trades at the current point of time or in the last half an hour on the indices? Let's start off with that first.
Yes, hi, very good afternoon, Niraj. Well, there's no doubt about the broader trend. After that V-shaped recovery that we witnessed post last Tuesday's correction, we have not seen any kind of selling pressure in the broader markets. Even today, if we see, in spite of this run-up, the mid-cap index is continuing with its all-time high, and even stock-specific momentum is quite good. So I think, in case also if we see any kind of correction in this uptrend, then it could be more of a time-wise correction where the index would trade in a range for 2 or 3 trading sessions. But again, it would resume its uptrend. So price-wise corrections, we are not expecting any for now. Any dip towards 23,300 to 250, I think, because the risk-reward issue, if I look at, support is coming around 23,200 and resistance is around 23,500. So right now we are trading right in the mid of that range. So if we get any dip towards the lower end of the range, then the risk-reward ratio would become favorable to take a fresh longs on the index. So I won't advise taking a long on the index at current levels, but maybe tomorrow, day after tomorrow, if we get any such dip, then use that decline as a buying opportunity. But they don't expect any significant price-wise correction. So I think the stock-specific momentum could provide more better opportunities rather than an index. So we are focusing more on stocks for now, and any dips we would use to get in the index.
What are those stocks, Ruchit? What are those stocks for the session today?
So a couple of buy recommendations would be at current levels. One is housing finance, which you always just discussing. Buy call on LIC housing finance would be there. Now, although the stock is up by 5%, but if you look at the price volume action, then today's up move has seen a breakout from its previous swing highs, and this breakout has been supported by very high volumes. And usually such breakouts with high volumes leads to a good trended phase for short to medium term. So I think LIC housing finance, even though is up today, but still it offers a good risk reward ratio to go long even at current levels with stock below 685. Potential targets are seen beyond 760 for this stock. And SBI Life is one stock which we are taking some contra trades. The stock has went through some decent corrective phase in last couple of months, and now technically it's on the verge of a breakout from a falling trendline resistance. So I think since the price wise correction has already been done, so downside seems to be very limited from here on in SBI Life. One can go long with stock below 1420 for potential targets around 1500 to 1520.
Right, Ruchit. Interesting play on the Nifty Bank. We breached 50,000 again briefly today before, falling below the 50K mark. What's the sense on this one? What levels should one keep an eye out on?
No, Ruchit, can you hear us?
Yeah. Sorry, I just lost it. Could you ask again? What was the question?
Yeah, sure. So Ruchit, talking about the Nifty Bank, we breached 50,000 again today in trade, intraday, and we've fallen off those highs now. So what are the levels that one should look out for on the Nifty Bank? And just talk us through what you're observing.
So one observation is that although Nifty has made a new high compared to last Monday, Nifty Bank is yet to make a new high, so which clearly indicates that there's still some room left for the Bank Nifty index. And if you look at the stock specific components, we have not seen any kind of short formations happening in the heavyweights. Although Kotak Bank we can see that it's not performing, but there are no short formations in the derivative segment. Even ICICI Bank, Axis Bank has gone through some consolidation phase, but no short formations are there. So I think once we see some kind of buying interest in these private sector heavyweights, then this relative underperformance which we have seen in the Bank Nifty index, I think a catch-up move would be seen for that, and we could see new highs coming in the Bank Nifty also very soon. So the trend remains positive for Bank Nifty. Today, maybe being an expiry day, we are witnessing weekly expiry, we are witnessing some consolidation. But 46,700 is a very good support for the Bank Nifty index, which are the hourly moving averages. So till that 46,600, 46,700 is intact. So broader trend for banking space also remains on the positive side.
Okay. Let's talk about the stock of the day today, and that is TVS Supply Chain Solutions. This comes after, the reason why it's the stock of the day because the company bagged a 5-year contract, and as a result of which it was up about 5%. It's up 5%, was up about 7-8% at the point of time. My colleague Kanika joins in to tell us what it means for the company. Kanika.
TVS Supply Chain Solutions is in focus today, and the company has received a 5-year contract with Daimler Truck AG, which is the world's largest manufacturer of commercial vehicles. Now, this contract is for integrated supply chain solutions service in Singapore, and the contract solidifies TVS SCS as primary logistics partner for Daimler Truck AG. And few key operational goals of the deal are firstly to develop robust logistics solution for spare parts distribution, and also to streamline supply chain solutions, supply chain operations for 16 Asia Pacific countries from a Singapore logistics center. Now, the stock is buzzing in trade today with an intraday high of almost 7.9% and volumes trading over 8.8 times its 30-day average. Now, coming to its management outlook, the integrated supply chain solutions business momentum is expected to continue in FY25 as per the management, which will be supported by a healthy pipeline and continued focus on margins. Additionally, the integrated final mile business, that business will achieve target run rate profitability by Q2 of FY25, and the global forwarding solutions business freight rates have normalized, and FY25 focus will be on improving profitability. The company also expects revenue growth of 15% year on year, and the capex guidance remains unchanged at 1 to 1.5% of revenue in the medium term. Back to you.
All right. Thanks for that, Kanika. Now, the stock is nowhere close to its 52-week high, though. Despite this 5% uptick, it's still 10% or almost 11% down when I'm looking at the returns year to date. So, interesting. But we also spoke to Ravi Vishwanathan, who's the managing director of TVS Solutions, Supply Solutions, on the deal. Let's hear his view.
Very excited to announce the TVS Supply Chain Solutions being the primary logistics partner for Daimler Truck Southeast Asia Private Limited. We have been having a relationship with Daimler for over 22 years, and this is a great breakthrough in the integrated supply chain solutions segment, where we are providing a very high-level solution to deliver and streamline logistics services. So let me elaborate. We will bring in efficiency driven by tech, our own tech, managing about 8,000 SKUs and 65,000 order lines annually, and it accommodates a very diverse range of parts with varying storage requirements. And we'll be delivering, most importantly, a customized IT solution suite built on the back of our own framework, and that will bring in tremendous inventory visibility and ease of engaging with their dealers and distributors. So it's a combination of an IT solution along with the supply chain management, which is what excited Daimler, and it's a real breakthrough opportunity for us in Asia Pacific.
All right, that's the management of TVS Supply Chain Solutions. But Ruchit, what's your sense with regard to this one when it comes to technicals? Because clearly the graph not looking very pretty, at least from a year-to-date or a one-year perspective.
Sometimes we do see gap ups or gap down based on news flows, but what happens post that gap up, gap down, or the follow-up move is more important than gap. So today we witnessed the stock opening towards 177 levels, and even at currently, if you see, the stock is just trading around the opening levels itself. So there has not been any kind of follow-up move post that open. So I think still one should wait for some kind of follow-up buying to happen in the stock, and on the higher side 185, 190 is the range, whereas good resistance is seen even in the month of April. Towards the end of the April, the stock corrected from those levels. So I think a follow-up move would be more important to see. It has been a relative underperformer in last few months compared to the broader markets. This has not done so well. So I think if one is only looking from a bit mid to long-term perspective or from a positional perspective, then one can initiate limited positions over here and add on to fresh positions only if we see a follow-up buying and a breakout above 190 levels.
All right. Those are the levels to look out for, 190 odd. But time to slip into a very short break. On the other side, we'll be joined by the management of Ward Wizard Innovations. Stay tuned. Welcome back. You're watching India Market Close here on NDTV Profit. Let me also welcome on board Sudeep Bandyopadhyay from IndiTrade Capital. Sudeep, we were just before we went to break, we were speaking about TVS Supply Chain Solutions and the whole logistics trade. If I can try and cover that, this big order win, of course, a big positive on a day like this, but we rarely talk logistics in a big way. Talk to us about your views and any specific stocks you have in mind with regard to logistics.
In kind of agreement with you guys, logistics needs to be spoken much more. In a GST environment, I think logistics becomes very, very important. And we have seen this happening over the last few years since GST got implemented. Even, if you leave aside GST, the trade and commerce, both import, export, as well as domestic, is increasing by leaps and bounds. And of course, logistics becomes important. We hear of quick commerce companies, we hear of delivery companies, food delivery companies. Now, these are manifestation of a different kind of logistics at play. But leaving aside the bigger picture, if we want to narrow it down to stock, I have been positive on one particular stock which has not found favor with the market yet, but I believe it has got a significant potential. That's the new gen company Delivery. I think it came out with an IPO, and since then there has been not very comfortable, not very happy kind of results and performance. But I strongly believe that this is one company which can deliver fantastic results and return to the shareholders over a period of time. They are in the right space at the right time and trying to do the right thing. Things haven't fallen in place to the extent probably it should have, but I'm hopeful that things will improve from here on. And the potential, considering that it hasn't gone up significantly, I would say is huge. And investors with a little bit of risk appetite will do well to buy into Delivery even at current levels.
Great. Okay. Let's Sudeep, stay on for a bit. We just have a management that we wanted to get some details on an announcement that they made, Deepak, and that's Ward Wizard Innovations and Mobility. The Deepak Doshi, CFO of the company, joins us right now on the show. Deepak, good having you. Thanks for taking the time out. This is Niraj here. Good afternoon. I would love to first get this clarity, Deepak. There is an exchange release which speaks about a $1.29 billion order, but a latter part of the release speaks about it being an MOU. Can you clarify for us whether it's an MOU, whether it's an order? When does this fructify into an order if it's not an order as yet? And what's the probability of it being an order if it's not an order as yet?
So first of all, good afternoon to all the viewers of NDTV Profit. We were working on this order from last 6 months. We have already delivered the prototype to the company in the Philippines and they have approved our prototype. And after approval of prototype, we have gotten purchase order from them. So it's a MOU with the purchase order we have got from them. It's a order of two-wheeler and three-wheeler. We have developed a prototype of D+10. It is a driver plus 10 capacity vehicle for which we
Deepak,
were already.
Deepak, sorry, Deepak, before you get into the details, so I don't just wanted to get this clarity. You said it's an MOU with an order attached. Did I hear that? So can you give us? So is it a confirmed order? Do you start executing something from next month or something like that, or is the confirmation still remaining?
So it's a confirmed order.
Of $1.2 billion?
Yes. So vehicle is under the approval of the Transport Authority of the Philippines government, and we have received the PO for 150,000 three-wheeler of D+10 category and 50,000 plus two-wheeler. Also, we are developing one of the model in a four-wheeler category of 1.5 ton commercial vehicle that will be work as for end-mile connectivity and end-mile delivery.
Understood, Deepak. Hersh also joining in.
I want to add one more thing here.
Sure.
Delivery will be commenced within next 3 months after approval of the respected authority of Philippines.
Understood. How large is this order for you, Deepak? Because, top line wise, around a billion and a quarter, in fact, in terms of the order size, is quite large. How quickly are you going to be able to execute this?
Yes, the order is obviously very exciting for us. Not only for us, but for the EV industry of India. We have started working in this direction. We have already started to increase in our from current capacity of two-wheeler and three-wheeler. And yes, it's very exciting for us. And we were working on this order from last 6 months, and we got this opportunity. Yes, competition was there from the different countries, but yes, through our strategies and pitching to the company, we were able to got this order. And it will be the huge opportunity for us to deliver this order within the due time frame. And we believe this we will able to deliver this order within next 3 years. And we have already started working on this roadmap.
Within 3 years. So revenues start from this year itself. Again, I just kind of take on from where Hersh left off, Deepak. Excuse our inquisitiveness, but March 2024 on a consolidated basis, you've done revenues of 321 crores. If I split $1 billion, let's assume it's a number of, let's say 8,100 also. That's nearly 2,600 or 2,700 crores per annum for a company which is earning 321 crores as of March 24. How do you execute this? Does the balance sheet have the strength to be able to execute such an order? Do you need to set up capacities? Will you take debt? What will you do?
Yes, as I said, we are excited and we will execute this order. Balance sheet and our current facility has its own capacity. Yes, we have to add on more on the side of the facilities for the three-wheeler. For that, we have already started working on that. We will require the fund. For that, our board of directors are planning to raise the fund through debt and equity. And yes, we got an order. We are fortunate to get this order, though our last year's financial is around 321 crore. But yes, as I said, we were working from last 6 months for this order, and we are fortunate to get this, and we will deliver the order within the given time frame.
Got it.
And we will upgrade our infrastructure, and we will upgrade whatever needs to be done to execute this order.
How will you do that, Deepak? Just trying to understand. Let's say if you have, what is the kind of funding required to execute an order of this nature? Would you need to set up capacities, or are existing capacities okay? And if you need to raise funds, how will you do that?
So fundraising will be done through both the modes, equity and debt, whichever mode is more convenient to us and favorable to us. Capacity, yes, we need to increase the capacity for three-wheeler, for which we have already land is with us. We have already land with us on which we can easily develop the infrastructure.
Deepak, how much will the fundraise be? How much do you need?
So fundraise will be anything will be around 400 to 500 crore, because as the order started to execute in next 3 months, we will get advances from that company, and from that money the rotation will be done. So for initial capex and working capital, we will require the fund of around 400 to 500 crore, and after that, as and when on the slowly and gradually when we will do delivery, and on the delivery we will get the recovery from them, and from that we will able to fulfill further working capital side.
Sure. So 400 to 500 crore. How much will be debt? How much will be equity, Deepak?
So we are working on that composition, but debt portion will be more, and or it will be a balance between both. But yes, we are working on the proposition.
Understood. And is the capacity that you are building, how long will it take for you to build? Because you're going to start executing just 3 months from now.
Yes. So capacity we can build in the next 3 to 4 months, and we can start execution orders from then.
Understood. So the 500 crore of capex pretty much entirely deployed in the next 3 to 4 months. Is that what you're saying?
So it 500 crore will not only for capex, but it will for capex and working capital both.
Fair. So
yes, so it will be implemented in a phase-wise manner, but
sure.
we will able to start the delivery, and we will able to manufacture the required products in next 3 months.
Understood. So say round about 8 to 9,000 crore of this being your order book. How much of that component will be executed in FY25, if I can ask you? What's the even an estimate? We understand it may not be absolutely accurate, but even an estimate will help.
So yes, we have to deliver this in next 3 years. So in a proportionate, we have to deliver at least 15-20% in the current financial year, and next to financial year the proportional will be on a higher side.
Understood. So nearly 6x in terms of revenue versus the current revenue number. And what would your margin profile be for these products, Deepak?
So margins are better in comparison to our current margins.
So would it be double digit, mid-teens?
No, it will be not like double digit, but it will be slightly better than current margins.
Sorry, so it won't be double digit?
No, margins will not be 2x. Margins will can come to double digit. But the margin from this order and exports will be slightly better from what we are selling currently in Indian market.
Understood. Fine. Deepak, it's been a pleasure speaking. Thank you so much for this visibility as well as perspective. Thanks so much for this.
Thank you.
Right. Sudeep, let me come to you. And I'm not sure if you heard that conversation. An extremely interesting play here. Top line going from 320 odd crore to nearly 1800 crore if the execution of 20% is met. Or maybe even 1500 crore if 15% odd is met. And also the EV play, right? What's your sense on the EV play in India? Should one opt for the smaller companies, the less known ones, something which like a Word Wizard who haven't executed as much, or would you bank on the more tested names?
Well, honestly, I would like to bank on more tested names because the proof of the concept probably still hasn't done for Word Wizard yet. They've got an order which is fantastic, and if they're able to execute it, probably that will take them to a different level altogether. But I think this is all in the realm of future. They have to do a lot of work. First of all, is a fundraise, and what kind of fundraise they need to do, and what kind of dilution will happen. All that needs to be seen carefully. I don't see too much of a problem there, but I think it's in the future. So I don't think I will, straight away jump into buying. I will keep watching the counter, and at the right time, I think it will be worth entering. So if I have to play this entire EV space, I'll go back to the tried and tested names.
Understood. And any names that you can give us, Sudeep, which you like at this point, given that valuations are decently elevated?
Well, I think the best bet, but the valuations are very high, are the battery companies, Exide and Amara Raja batteries. Now, you can't really go wrong there because whosoever wins, battery is must. And the battery companies will definitely win in an EV scenario. Compared to an IC engine, I think the requirement of battery has gone up multifold in an EV scenario. So obviously the battery companies will benefit and disproportionately benefit. So my bet will be on both these battery companies.
Understood. Thanks so much, Sudeep. Time to slip into a very short break. Stay with us because on the other side we'll have top buy-sell recommendations from Sudeep as well as Ruchit, as well as picks and a look at the derivative markets as well. Welcome back. You're watching India Market Close here on NDTV Profit. I have Agam standing by to break down the FNO cues for today. Agam, what is the FNO data indicating?
Right. Well, we're looking at a little bit of temperance as far as the benchmarks are concerned. They're in the green, but we are still looking at them off day's highs. And now I reckon that to a certain extent, this is profit taking, some amount of it. And we have still seen about an increase of around 2.5% in open interest for the June futures. Well, moving into the Bank Nifty, let's take a look at how things are faring there. And well, we do have a 0.3% advance there. Again, another 2% added in open interest there. Now, when it comes to the options market, the Nifty largely moving within the expected range of 23,000 and 23,100. That is the big range that we are keeping an eye on. That's exactly how things are faring at the moment. And even in terms of the Bank Nifty, well, through the course of the day, we saw the Bank Nifty move above the mark of 50,000 and then retrace. It does seem like at the moment we are going to close below 50,000 even as we speak. In terms of stocks, of course, it's been a mixed day of trade, but we do have more longs in Sun TV, Canfin Homes, Oracle Financial Services, and on the other hand, some shorts in Interglobe Aviation, Pidilite as well. Of course, on the other hand, in terms of stocks which are seeing unwinding, long unwinding for Gujarat Gas and Escorts, and short covering for ABB, Concor and Tata Chemicals. All in all, a mixture of trade, and again, we continue to keep an eye on the benchmark indices, which continue to move sideways.
Right. Thanks so much, Agam, for that. One stock that's really stood out, Ruchit, for me today, at least, if not the whole sector, but media is doing especially well in trade. Ruchit, talk to us about Sun TV in particular, because that one has flown away in trade, and Agam did point that out. What's the sense like? What are charts and what are charts indicating, and what are levels to look out for? And what's the sense on the media pack as a whole?
So in fact, if you look at Sun TV, then the stock has come out after a long consolidation phase. It has been within a range since 2018. If you look at October 2018, the stock was trading around 700 kind of levels. And even in last month, if you see, the stock was same around 700 levels. So it has gone through a long period of consolidation or corrective phase. But finally, now the momentum has again started picking up. And with a breakout above that 700 in this month, it has been supported by very good volumes. You look at volumes post these elections, the price up move has been supported by better than average volumes. So I think signs are quite good. Over a period of time, I think the stock has potential to head towards 850 in the near term and about 950 to 970 in the medium term. So trend remains positive. One can look for buying opportunities on some kind of declines if we get around 750, 730, where a good support could be seen. And if you look at the overall media pack, then the Nifty Media Index has seen some pullback move. And if you look at the weightage, then most of the heavyweights from the media index comes from Sun TV and Z Entertainment. Even Z has seen some kind of pullback move in last 1 week. So hence the Nifty Media Index has also moved up. So I think one can take a stock specific approach within the sector. Dish TV has seen a good price volume breakout today, where price up move supported by good volume. So I think certain stocks within the sector could be outperformers in the near term.
Sure. Sudeep, we're talking about less spoken about sectors with you, at least on this show. Talk to us about media, whether you like any specific names, and Sun TV in particular. Some bit of buzz that the numbers were far better than the overall media pack and therefore warrants a better valuation. Talk us through your views on that.
Well, Sun definitely deserves probably a better valuation. One has to remember that it's extremely volatile, and volatility comes not from only their results, but from the political, winds. So obviously, once the elections got over and the market got excited with Sun, because of course the DMK had a clean sweep. So obviously the excitement was back. Also remember one small factor: the IPL team did very well this time. The IPL team, Sunrisers Hyderabad, which is really a part of the Sun. So that also did very well. Overall, we are positive on media, and specifically on Sun, I think they have leaving aside the extraneous factors, they have a fantastic hold over the Tamil-speaking market. Whether it's locally or internationally, and the kind of library they have, the kind of content they have, it's unmatched. So they are bound to do well going forward also. And yes, a better valuation can be expected along with the overall media and entertainment space.
Very interesting. This one being the top gainer on sectoral indices, very bullish, at least on the fundamental side of things. But anyway, another stock on our watch list is Krishna Diagnostics. Systematics has initiated coverage with a buy rating. 40% upside is what they've ascribed to it. Stock is up now 7% at the high point of the day. Varsha joins us. She's broken down that report. Varsha, talk to us about what are the key pieces of that report which is interesting.
Well, thanks Hersh for that. So yes, stock is buzzing on the back of Systematic initiating a coverage on Krishna Diagnostic. And if you see, Krishna Diagnostic operates in B2G, that is business to government segment, position as a high quality, affordable diagnostic service provider with 60 to 80% price discount to its peers. Now, lower cost, higher volumes to more than offset the limited pricing in PPP model, as the pricing strategy over here is volume driven according to the brokerage firm. Now, see, Systematic is expecting 30% and 47% CAGR in revenue and net earnings over FY24 to 26. Now, this would be led by superior utilization of the recently set up diagnostic center. Now, the interesting part here is, as on 31st March 2024, if you see, only 37% of Krishna's investments were used to optimally generate 35% ROC, while about 49% of Krishna's new center are semi-matured and generate 20% ROC, while the rest have just started and generate negative 22% ROC. Now, once these centers become mature, we can see good growth in terms of revenue. Also, opening of new centers, which will also help Krishna's growth prospects. Now, brokerages are expecting ROC to normalize in 15 to 20% range once capex intensity reduces, and Krishna is also focusing on strengthening its B2C, that is business to consumer presence, by leveraging its growing network of pathology collection centers. And lastly, if you see, brokerage see minimal downside risk to Krishna's earnings. A B2G business model assures business volume and significantly lowers the competitive risk.
Okay, thanks for that, Varsha. Thanks for breaking that down. But Sudeep, let me come to you. Again, a space that's not too spoken about, the healthcare space. You look at an Apollo Hospitals on the Nifty 50, probably the only counter there within healthcare. 25% 12-month returns. Do you believe that this space, one, is just under-tapped and therefore likely also under-owned, of course, but also from a perspective of coverage, not enough coverage is given and therefore not known as much, and could be a good space to invest in at this point?
Well, there has been some excitement undoubtedly in this space, and a lot of deals have happened. So interest amongst investors is definitely there, and I would say evolved investors have already moved into this space in a big way. But yes, Apollo definitely is good, but beyond Apollo, one can look at Vedanta, one can look at Max. I think there are enough opportunities in this space, and you're right, the growth potential and growth prospect is huge. So, investors even coming in now would not regret if they are investing it for long term.
Okay, got it. And specifically with regard to Krishna, any views, Sudeep, at all?
Well, I'm a little, careful on the diagnostic space. So I would, in my opinion, the competition is too much and competition intensity is increasing. So I am not, too bullish at this stage, considering the valuation at which some of these diagnostic companies are quoting.
All right. So keep your eye out on that one. As Sudeep correctly mentioned, likely some bit of competition will weigh down on some of these names. But let's try and switch focus onto consumer staples. That's a space which has really taken off post the election results. And we had Rhythm Desai in our studios yesterday to talk of Morgan Stanley, and he spoke about how consumer staples valuations are looking, maybe not as much about valuations, but the cycle of consumer staples. And, as the investment bank kickstarts the India Investor Forum 2024, let's hear what he prefers over consumer staples and his views on consumer staples in particular.
On a relative basis, again, and rural India reflects most in the stock market parlance, it reflects into consumer staple stocks. They underperform in the 03-07 cycle. And their outperformance started in February 8. So from a stock market perspective, it's certainly not the place to be. You don't want to buy consumer staple stocks. Yeah. I mean, there may be pops and trading pops. And there was one last Tuesday because everybody thought populism is back, and it was a great moment to sell the stocks again and come back into industrials, which took a little bit of a backseat. But I think industrials and financials will lead the pack. Consumer staples will be trailing.
Consumer staples will be trailing, and he also mentioned that it will take some time for a turnaround to come through. Sudeep, we're seeing a bit of a cool off on the FMCG pack today. Not necessarily an indication of what is to come, but just because of that cool off, taking this as a peg to speak about consumer staples as well as FMCG in general, give us your views and thoughts with regard to both valuations, because that's not something he spoke about, and also with regard to the cycle. Do you believe that the rural play is on?
I definitely believe the rural play is something which is worth looking at. The consumption names have suffered for quite some time and haven't done really much. And I strongly believe that particularly the FMCG, I won't get into the Varun Beverages and Radico Khatans and Balrampurs of the world, but I'll definitely want to talk about an HUL, a Dabur, a Manico, and the likes. So I think there is a significant upside potential on these stocks. Look, we are expecting good rains. And the good rain should definitely help, easing the rural stress. The government also has started taking the right steps for easing rural stress. All these efforts will definitely ensure increase in rural consumption, which was really the challenge for some of these FMCG majors. And I strongly believe that this is going to happen now over the next 6 to 12 months. And with that, I think performance of a company like HUL, Dabur will definitely improve significantly, and provide an opportunity for investors coming in at the right time, an opportunity of making good returns.
Okay, very interesting. Ruchit, on charts, how's this space looking?
So overall, we believe that the price-wise corrective phase is behind us now. We have seen a long period of underperformance within the FMCG sector. But what recently the price up move that we've seen in stocks such as Dabur, which has given a breakout from a consolidation of about 3 to 3.5 years. Then Marico also, before the results itself, during the quarterly results, Marico witnessed a breakout with a good price volume action. HUL from the lower levels has again seen a good pullback move. So I think there are certain stocks which are giving an indication that the worst is behind us. Worst is behind as far as price-wise corrections are there. There may be some time-wise corrective phase where the stocks could trade within a range for the short term or maybe for next 1 quarter. But I think overall the downside, price-wise downside seems to be very limited from here on for the FMCG basket.
Thanks for that, Ruchit. So that's on FMCG. We've kind of covered pretty much a lot of bases there, but let's quickly switch focus. We earlier today spoke with Zentek's Ashok Atluri on the company's growth outlook. Listen into a slice of that conversation on what he had to say on both Zentek as well as India's defense sector. What can one expect from this going forward? Listen in.
I think what has been achieved in the last 10 years will be dwarfed by what will be achieved in the next 5 years. I think it's going to be a fantastic next 5 years. We are, with our grounds to the year, we know that Indian government is very, very focused on getting as much, not just manufacturing, but even the design and development, IP ownership, which is all about Atmanirbharta, to India and in India. And I think the next 5 years will be absolutely golden period for the defense industry and path to self-reliance in defense for the defense forces. Mr. Naidu has been fountainhead of all this culture of technology for even though he was not part of Telangana, but I think almost a corridor will come up, and companies that are focused on especially coastal defense, like Visakhapatnam is a big center for that. So we do think that there will be some synergies where with with Mr. Naidu coming in, and he's very, very pro industry. So we think a lot of defense work will probably start in Andhra too. So in naval related fields, so that is one area we really want to collaborate with the Andhra Pradesh government.
Right. Sudeep, no cues there with regard to the potential. He's very, very bullish. But with regard to defense, just in terms of valuations and the order book which has been lined up, everything now depends on execution. Do you believe that valuations have run ahead of themselves?
To some extent, yes. And that's the reason why I've been careful on defense. There are good quality companies, whether it's these shipyard companies or some of the companies which are like Mazagaon Dock, Cochin Shipyard, Garden Ridge Shipbuilders. I think good companies that have been doing good. And as you rightly said, massive order book. Execution has been decent. But, probably the valuation is a bit rich, and I don't think I will recommend buying into these stocks. One particular area in defense where I'm positive and I'm still recommending buy is defense electronics. A company like Bharat Electronics, I think this is core to every kind of defense initiative, whether it's Air Force, Army, Navy, or even multiple other uses. And, of course, the order book is fantastic. Execution has always been, good, and it's a rarity among the PSUs where you can talk about a track record of execution over a long period of time. So under the circumstances, I think Bharat Electronics is in that sweet spot, and that can be looked at even now for a long term. Don't buy it for 1 or 2 months. Have 1 year plus time horizon minimum in mind.
Got your point, Sudeep. Thanks so much for that. BEL definitely on his radar. Let me switch over to Ruchit. Ruchit, your view, Zentech, BEL, any other defense play that you are liking on charts?
So we have seen a decent up move in last 1.5 years, in this entire space. And what we have seen recently that the corrections were there, but the stocks have not broken their important long-term supports. So I think there could be some consolidation in the near term, but any kind of declines in this consolidation terms, in stocks such as BEL or even BEML, then I think these are the two names where we would advise taking fresh long positions on decline. So BEL and BEML, these are the two stocks which technically long-term charts are looking quite strong, but not at current levels. So in case if we get any kind of dip, then buy on dip strategy should be capturing these names.
All right, Ruchit, we're very close to maybe just 10 minutes to go for close. But we also spoke with KC International's MD CEO Vimal Kejriwal, who spoke about a potential shift in priorities in railway spend for the new government. He also offered his take on the new Power Minister, Manohar Lal Khattar. Listen in to his views.
So I think we are pretty happy with, obviously, with the Finance Minister and also with the Power Minister, the Railway Ministry, with Mr. Vaishnav continuing in the Railway Ministry. Power Ministry, obviously, we have seen a change with Mr. R.K. Singh going out and Mr. Manohar Lal Khattar taking over. So I think that we will keep on watching. Railway, we do expect that despite continuity, I think we are hoping that there's a change in the priorities of the railways. Because till now, the last couple of years, we were seeing the priorities more on, running more trains and sort of rebuilding stations, etc., and a little bit less focus on the infra build. I do hope that now, this year onwards, we'll start seeing a lot more infra build happening in the railway sector, which would be tracks and, signaling. Today, Vande Bharat is running at 70, 80 kilometers instead of 140. So a lot of investment will have to be made, at the ground to ensure that we achieve the optimum, capacity, etc. So we do hope that at least on this part of railway, something happens. Power, I'm sure that there's no alternative. The way power demand is growing at 5-6% and the government first continuing on renewables, there is need to expand the T&D network significantly. So I'm very sure that will continue.
Right, this is Agam Vakil joining in for the last 8 odd minutes of closing. Well, we are in fact taking a look at how things are faring, and I want to talk about the information technology sector. Now, Sudeep, I'll come to you on this one because, while there is a little bit of a valuation play out here, the growth has really gone away for the entire IT sector, and some believe that the IT sector could have a lot of value traps in store going ahead. Is that your opinion? Do you think that's potentially one way to look at it?
Well, if you are looking at a slightly long term, I don't see there is any problem. And neither it's a value trap. Look at the top companies, TCS, Infosys, even HCL. I think there is no fundamental problem. Yeah, there are challenges in the US market, some slowdown in ordering and things like that has been happening. But I think management is sounding much more confident about the business environment and the order book position now. And things are slowly turning for the better. Now, whether it will be a roaring quarter, which we are in now, I don't think so. But I think things are slowly improving. As far as valuation trap is concerned, I don't think there is a trap as far as the valuation of the top tier IT companies. But some of the mid-cap IT companies and smaller IT companies, yes, the valuation looks rich. And one needs to be a little careful while buying into these stocks. Now, I'll talk about one more theme as far as IT is concerned. That is companies focused on segments which are doing well. Like, travel and tourism is doing well. Now, some of the technology companies, and we know some of the names, who are doing focusing only on travel and tourism, providing service to travel and tourism sector. Now, they are doing very well and they will continue to do well. Some companies are focused on automation of vehicles, and their contribution in EV transition is also significant. Now, these are the companies which are going to benefit on the technology side, on the mid-cap, small-cap side.
All right. Well, there you have it. Of course, names like KPIT Technologies, Tata Technologies for that matter, also have a little bit of a differentiated play catering to the auto sector specifically. But we just have about 5 more minutes to go before closing. I'm going to head across to Ruchit and take his buy today and sell tomorrow calls. Ruchit, what do you have on your radar?
So IEX is one stock which one can look for a BTST. So the stock is on the verge of a breakout from its previous swing high resistance. Good volumes. RSI has given positive crossovers. So the structure is looking very good for a BTST trade, and already the stock has gone through a long consolidation or underperformance phase. So one can go long at current levels from a BTST perspective, keeping stop loss below 169 and expect targets around 180 to 183.
So that's as far as your BTST trades concerned. But Ruchit, if I want to just take a little bit of a longer term view on the benchmarks, not necessarily today, tomorrow, not necessarily even for the next week, but perhaps, as we move into the month of July, we are seeing a little bit of consolidation playing out on the Nifty. Keeping that in mind, on a positional basis, what levels would you be watching out for? And, let's just talk about beyond 23,500 and perhaps beyond 23,000 at the moment right now. Beyond that, what levels become key at the moment if we actually were to genuinely decipher that the Nifty is out of the consolidation zone from here on?
So Agam, I think on the lower side, we would see a strong support around 22,800, which is the 40 days exponential moving average. So I don't see the index going below that in next few weeks or next 1 month. So that would be a very strong support. In case if we see any kind of dip where 23,000 is broken, then not much downside would be seen, but 22,800 would act as a very strong support over there. On the higher side, generally, whenever we see all-time highs, we take retracements of the previous corrections to look at what are the probable next resistance or targets. We had gone through one corrective phase during last week on the day of election results. And if we take 127% retracement of that correction, then it gives a potential targets around 23,900. So I think markets, once this, we have already seen a V-shaped recovery. So some consolidation could not be ruled out. So consolidation or one correction to relieve the lower time frames overbought setups. But once we resume the momentum on the higher side, I think one should expect levels around 23,900 very soon.
Right, about 2 minutes to go for close. Sudeep, a quick question on Paytm. This one has continued to gain over the last 3 sessions. Your view here?
Well, I'll be careful. I think a lot of things have happened, and there are a lot of floating parts. Let things settle down. Then only one should look at Paytm. At this stage, whatever is happening is speculative buy or speculative positioning. So I don't think I would recommend that.
So that's the view on Paytm. Of course, so we're inching towards today's close, and the Nifty Bank has given up quite a bit of the gains in today's day of trade, nearly marginally in the green, just about there. So it seems that this expiry once again has turned out to be a little bit of a problematic one. The question really is that is this a sign of what we can expect tomorrow? That's a wait and watch. But for now, we are looking at benchmarks under pressure. Well, on that note, I am going to toss it to Hersh to take us through how the closing is turning out to be at the moment.
Well, thanks so much, Agam. Thanks so much, Sudeep, as well as Ruchit, for joining us today. But let's quickly take it to the benchmark, because we're a minute away from close now. Pull up the Nifty 50 and thereafter the heat map. So around a fifth of a percent higher. We were at higher levels intraday. So this kind of cool off that we've seen, a bit of a cool off, is what we've seen on the benchmark itself. Let's pull up the advanced decline. And what we're going to see is there is still enough strength left, especially where the advanced decline ratio is concerned. Off the highs of the day for short, but just a wee bit, not much. So that's one positive that I would really take. Let's pull up the heat map. And what we're seeing here, some good gainers, especially in power and IT that we're seeing, along with a couple of names in the NBFC space, a Shriram Finance and a Bajaj Finance, both over there. Ultratech on the back of a couple of good brokerage notes, both Citi and Motilal constructive on Ultratech. In fact, top pick within the cement space on the back of possible price hikes. Also, what you're seeing at the bottom rung is maybe a bank or two, but largely what you're seeing is FMCG names. We've closed for the day, and what we're seeing, look at the bottom rung. You're seeing Britannia, HUL, Tata Consumer, Titan, and all of those names under some bit of pressure, along with Divis and an Infi. But outside of that, the market breadth looks quite decent, especially on the benchmark. Let's pull up and see where the mid cap and small cap index has closed off. And we're seeing 1% on the mid cap, so that one has held up fairly well in trade. And the small cap 2 up 1%. So the broader markets have played it well today. They've held up despite a slight bit of weakness that we've seen through the day on the Nifty 50. While Agam comes in, we'll just pull up some specific counters where we saw focus. Let's pull up something like a Paytm, see where that one is closed, because Agam, that one has done surprisingly well over the last few days.
Yeah.
And we're also seeing some housing financiers do fairly well. So within that NBFC banking kind of pack, we're seeing something like an Aptis and Aavas and Aadhar do fairly well over the last 2-3 days, especially on policy. But Agam, why don't you take us through how the sectoral indices have done?
Right, absolutely. So let's pull that up and take a look at how things are in fact faring. What we are seeing is that the media and PSE indices are advancing in trade. In fact, a majority of your indices are in the green, say for something like an FMCG, which is taking a knock about 0.5%. And consumption, well, I'm really not going to say much because it's largely flattish. It's still looking like a pretty decent day of trade in terms of how sectors are panning out. If we just consider perhaps some of the constituents of the mid-cap and the small-cap indices, we get a better idea about those stocks which are in fact advancing in trade. So this is your BSE 500. We have an up move around 9% for Suntech Realty. Max Health doing well, advancing by about 8%. It's the same for Trident, and several other names coming on your radar there. And on the losing end, the momentum is not as much. We do have something like the Brigade Enterprises or Sterling and Wilson, maybe something like an Pidilite as well, along with APL Apollo, declining by around 3 to 4%. But on the whole, it looks like a fairly evenly poised day, Hersh.
Absolutely. In fact, a positive day on the benchmark, but the broader markets did quite well today, Agam. Well, completely out of time. From Niraj, Agam, myself, everyone who puts the show together, thanks so much for watching. India Market Close. We will see you tomorrow, but stay tuned because live programming continues.
welcome. You're watching NDTV Profit, and I'm in conversation with Vikash Halan, the Managing Director for the Corporate Finance Group at Moody's Ratings, and K. Ravichandran, Executive Vice President and Chief Ratings Officer at ICRA Limited. Thank you so very much to both of you for taking time out and joining us today.
It's an honor. Thank you.
So I'll start with you, sir. Tell us a little bit about what the corporate funding environment is currently looking like.
Yeah, so the corporate funding needs in India certainly are high given the amount of capex that everyone has planned for, the working capital needs, the shareholder returns. When you look at the aggregate of that capital funding, we estimate somewhere between 50 to 70 billion for our rated portfolio over the next couple of years. But a large portion of that funding or that need for funding will be through the internal cash flows and very little reliance on external debt. Having said that, if those corporates were to access funding, there is ample liquidity in India, whether you look at the bank market, whether you look at the equity market, or whether you look at the bond market. Beyond that, if you look at the international funding environment, at the moment, the rates are not that attractive. However, the ability to fund still remains if needed, but it will cost you. At this point in time, we are probably at the peak of the interest rate cycle when it comes to the cross-border funding, particularly in the US market. We've already seen ECB starting to cut rates. Possibly, we are looking at reduction in interest rate, over the next 12 months, and rates to normalize. So that would make the funding environment even more conducive for corporate India, in addition to having very significant domestic liquidity.
Okay, so you spoke about how, over the next few months, we might possibly see lower interest rates globally and in India, which might be conducive for corporate funding. But here in India, we don't actually expect a deep rate cut cycle in any case, right? So I'm just trying to understand, that going forward, what's the outlook looking like for corporate funding in terms of interest rates?
Yeah, so my point with interest rate cuts were not with respect to India. So you would see, and India didn't raise interest rate as much as some of the other, markets that we saw. So we don't really expect that to be a big factor for the funding environment. The funding environment in India, despite where the rates are, is significantly better than, what you would get in the foreign markets. So our expectation of funding environment in India is not related to the interest rate cut per se in India. It was more to do with the funding environment or the attractiveness of funding overseas will improve as interest rate starts to come down.
Okay, got it. Any sectoral trends? So, for quite some time, we have seen capex being driven in limited sectors. And also in recent quarters, there does appear to be a shift in terms of the sectors that are driving capex, maybe in renewable energy, for instance. So any trends and patterns that you've seen in that space, sectoral trends?
Yeah. So in the recent past, Government of India has been driving the capex through good budgetary outlays on roads, defense and railways, etc. In addition to that, many state governments also have been providing for fair amount of outlay on various infra projects, irrigation, water supply, and so on and so forth. So because of this, there has been crowding in of private sector investments. If you look at the order book position of many contractors, they are brimming with orders, and that has really helped them to shore up their balance sheets. But having said that, on the pure private sector capex, it has been quite anemic. And going ahead, we expect some pickup, especially in oil and gas, metals and mining, and hotels, healthcare. These are some of the sectors where we see a good pickup. In addition to that, PLI-driven investments, especially in electronics, semiconductors, textiles, solar modules. These are some of the sectors where we would see pickup. Already investments are underway, and over the next 3 to 4 years, you would see at least some 3 to 4 lakh crore of investments, which are on the anvil. Unlike the previous capex cycle, which were dominated by investments on the thermal power and refining, etc., which were highly capital intensive, guzzlers, etc. Whereas in the current cycle, you are seeing investments more on the green side, renewable energy and green hydrogen, green ammonia, EVs, batteries for the EVs, pumped hydro, and mostly frontier areas of capex towards ESG credentials. So that is the big change compared to the previous cycle, but on aggregate basis we are still down compared to the previous cycle by maybe about 15-20%. For us to really pick up on the demand side, things have to improve. Consumption overall is somewhat subdued. For us to get higher way of higher growth, perhaps we need to have some stimulus on the consumption side that could drive up investments on the private side.
Okay, interesting. So, we've already seen a slew of government measures. You touched upon PLI, but at the same time, we have seen consumption continuing to remain tepid. The outlook in terms of consumption, while we do expect rural consumption, for instance, to see somewhat a little bit of a pickup in the coming year, do you think there is need for more government stimulus to drive consumption as well? And also, even in case of manufacturing, while we have seen government measures like the PLI scheme that we've spoken about, you do believe there's scope for more to be done in that space as well? Yeah,
taking up the consumption first. See, within consumption, the upper end of the market has been doing pretty well. If you look at the residential real estate market, the upper luxury apartments have been selling like hotcakes. And so would be the case with hospitality. You can see, the leisure, hotels and even business class hotels. These days, occupancy levels are fairly high, and even jewelries and high-end cars. Even if you look at the alcohol segment, high-end premium alcohol sales have been pretty good compared to the mass market. So, if you look at any major industry, the premium end of the market has been doing very well. Whereas when it comes to the lower end of the market, especially in the rural areas, etc., industries which are catering to these markets, especially two-wheelers, FMCG, some of the microfinance financiers, they have not been doing that well. There's scope for improvement in their growth. To a large extent, the market was impacted by uneven monsoons and El Nino and high inflationary trends, etc. Perhaps some support would be required at the lower end of the market. So that's on the consumption front. On the manufacturing front, while investments have been happening on account of various incentives, those should be good enough. It's just that on the demand side, things have to pick up. If you look at the aggregate capacity utilization, it has been hovering about 74-75% for quite some time. So unless demand picks up, there is no incentive for the companies to set up large cement plants or steel plants, etc. It will grow in a normal way, but for us to go to the next level, demand has to pick up. For that, perhaps some tax reliefs, and other kind of investments related measures perhaps could be required to incentivize more demand. Got it. Mr. Hallan, you spoke about how one of the sort of challenges remains that India and the Indian manufacturing sector is predominantly manufacturing for domestic demand. And that's something which needs to change in terms of putting in a more sustainable structure in place and, India integrating into the global supply chain. You also spoke about some of the challenges, for instance, high logistics costs. Tell us a little bit about that.
So if you look at the industrialization of many of the economies over the last 50 years, particularly in Asia, those industrialization has happened because they're manufacturing for others or export-driven growth. Now, India doesn't need to do export-driven growth, particularly if it were to grow at 6-7.5%. But if it were to target a much higher growth, which the government is targeting, then you would need some degree of export-driven growth. And for that to happen, you would need to be cost competitive. And if one of the key components for the cost for that situation to correct is the logistics cost. And logistics cost in India is still very high. In addition, there are certain softer factors with respect to doing or setting up a business from scratch in India is still pretty daunting for many of the players who are big in this sectors who haven't yet started manufacturing in India. They would need more assurance, more easing of some of the regulations, better coordination between state and the center in terms of their policy framework. All of those will need to fall in place before you start seeing an impact. Now, these changes incrementally will not result in significant improvement, because they will, as these changes fall in place, you would see more of an inflection point, at which point you would see, tide turning towards manufacturing in India. So 1 out of 7 things falling in place will not result in a 14% growth.
Okay, all right. Well, that's about it. Thank you so much to both of you for taking time out for us.
It's a pleasure. Thank you.
The new government looks confident on achieving the ethanol blending target of 20% by 2025. But is that also the case with key industry bodies? For this, we are today joined by Deepak Balani, who is the Director General of Indian Sugar and Bioenergy Manufacturers Association. Thank you so much, sir, for joining us.
Thank you.
My first question to you is on definitely the fact that the government looks extremely positive on achieving the ethanol blending target. Even yesterday, the oil minister has reinstilled the confidence in his speech. So my question to you is, what are your expectations from the 3.0 government? And do you agree with the confidence that the government is showing on achieving the ethanol blending target?
I think we believe that the government, first of all, will continue the proactive policies for the sugar industry. As far as our expectations are concerned, I think with Modi 3.0, the government 3.0, immediate actions of the government should be for the long-term stability of the industry. You know that the government made a policy shift in December 23 and reduced the juice and B-heavy based ethanol production. So it was reduced to 17 lakh tons diversion in 23-24 from 38 lakh tons the previous year. So this curtailed the juice and B-heavy production, which resulted in underutilization of the installed capacity, which we all know led to huge losses to the industry. I think this has resulted in a substantial increase in sugar inventory, which would be, I think would be around 90 lakh tons on 1st of October this year. So therefore, I think first of all, these policies should be re-implemented to manage the rising sugar inventories and also support the industry's stability. So I believe the first and the foremost priority of the government should be on continuation of the ethanol blending program by allowing juice and B-heavy for the ethanol production. Second, but equal priority is also the revision of MSP of sugar and its alignment with the FRP of sugarcane. In earlier years, depending on the FRP, MSP was raised to ensure viability of the millers to pay the cane prices to the farmers in a timely manner. So it was always that whenever there was an increase in FRP, government increased the MSP. But since 2018 and 19, they have not increased the MSP. So I think that needs to be corrected and the MSP needs to be revised vis-a-vis the increased FRP of sugarcane. Third is a very important factor, that the revision of ethanol pricing. Any time when the FRP of sugarcane was increased, B-heavy, C-heavy and juice-based ethanol prices were corrected accordingly. I think we would request government and we expect them to correct the ethanol prices for the juice and B heavy for 23-24 and for juice, B heavy and C heavy for 24-25 in line with the increase in FRP of sugarcane. As far as the 20% ethanol blending target, I think we must congratulate the government. I think we are on the right track. As ISMA, I think we are very confident that the ethanol program is on track. Going forward, things look good and the sugar sector will achieve its target. I think currently we have our capacity specifically in the sugar sector of around 850 crore litre. And as per the Niti Aayog report, requirement of 20% blending will require approximately 1,000 crore litre of ethanol. So I think they have projected, Niti Aayog as per their roadmap, they had projected a requirement from sugar industry to be around 550 crore litre. So I think we believe that with sufficient feedstock availability, we as a sugar industry will be able to cater to the required quantity as per targets. So for this, we basically have also submitted an action plan to the government for long-term sustainability of sugarcane production, which will help negate fluctuation in production we have seen because of the uncertainties of weather. So we are confident that the sugar industry will be able to supply almost 55% of the total ethanol for 20% blending. And I believe the government is very keen to work on our proposal, and we hope that they will come out with a national mission on sugarcane in near future.
That's really great. My another query on this is that there is, on one hand, where so much of thrust is there on meeting the ethanol blending target. On the other hand, ISMA is also seeking the government approval for 2 million ton of sugar exports in the marketing year. So how is it likely now with the change in the government is saying, but definitely with not as clear majority. What do you think? Is it likely for the government to approve this?
See, we had already requested for an approval of 2 million tons of sugar exports, and that was based on facts and figures. So if we go back in the last season, the opening stock, for example, in this 23-24, the opening stock was around 55.65 lakh tons. And we had the production of 320 lakh tons this year. And with domestic consumption of around 285 lakh tons, I think on 30th of September this year, we will have a closing stock of around 90 lakh tons. I think we believe that we have enough supplies to meet the domestic demand of sugar and also export at least 2 million tons of sugar this year. And given that the fact that we have an improved pre-monsoon rainfall, we have the forecast indicating above normal monsoon conditions, and the sugar production for the 24-25 is expected to be moderate. I think it will ultimately, we will have a substantially higher closing stock going forward. So I believe this export allowance would not only ensure a comfortable stock for domestic consumption and also sustain the ethanol blending program, I believe it will also contribute to maintaining the financial liquidity of sugar mills and enabling them to pay timely payments to the farmers. I think with these, we expect the government to take a decision on export soon.
Okay. So, sir, you just mentioned that the normal rainfall that is expected this season can really help the production of sugarcane and hence the industry as well. But what are the potential headwinds that you see for the sugar industry at this point?
I think what we basically see that one is the ethanol policy. You know, going back, ethanol policy has really helped stabilize the sugar economy by ensuring timely payments to farmers, supporting mill owners financially, and reducing the carbon footprint. So I believe future policy should continue these benefits by following past practices. This includes diverting sugar for ethanol production, setting the right ethanol prices, and having effective export strategies. I think these are the steps which are very essential to manage increasing sugar inventories and keep the industry stable. I believe the government must look at holistic policy framework for the sugar industry, which will be a balance between interest of farmers, mill owners, consumers, and the environment. I believe by focusing on sustainable practices, fair mechanism of prices, technology advancement, and with strong institutional support, the industry can achieve very long-term growth and stability.
Okay. And so lastly, what are the key areas of focus that ISMA has as an industry body for the current fiscal? And apart from that, any other approvals that you are seeking from the government so far?
So basically, we have requested, as I said, we have requested for the National Sugarcane Mission, where we want to increase the yield per hectare of the sugarcane. So there are various schemes where we have requested the government to allocate for sugarcane to enhance the productivity. There are existing schemes like per drop per crop. Then we have watershed development, mechanizations. So going forward, I think these are the issues which ISMA would be talking to the government on. And I hope that we will make sure, I think government will make sure that there would be sustained policies which are in benefit of the industry and the farmers.
Okay, thank you so much, sir, for giving us your time, and it was a great time we had talking to you. And all the best for all your future ventures. All the best to ISMA for all the approvals that you are seeking. And yeah, thank you so much.
Thank you very much.
budget of Modi 3.0 is likely to be presented in the third week of July. As per sources, the finance minister officially took charge today. Electric auto rickshaws are more in demand than electric scooters. That's thanks to subsidy for scooters that was done away with. And SEBI gives its nod for Ola Electric's 7,000 crore IPO. This will be India's first pure-play electric vehicle IPO. Another big IPO, Hyundai, is expected by the end of this month. The Nifty and the Sensex came off record highs in the late trade. Mahindra & Mahindra, Hindustan Unilever and Infosys drag. Nifty mid-cap 150 touches a new high. Everyone's favorite, it seems, Maruti Swift beats Tata Punch to become the best-selling car in May. We bring you all of its new features. Chandrababu Naidu takes oath as Andhra Pradesh Chief Minister for the fourth time. Power star Pawan Kalyan is sworn in as Deputy Chief Minister in a star-studded event. All eyes on the FOMC meet later tonight. Will the US Fed lower rates? Congressmen write to Fed Chairman Jeremy Powell asking him to lower rates. Hello and welcome. You're watching The Reporter on NDTV Profit. I'm your host, Smriti Chaudhary. As always, this show aims to bring you the market headlines along with national and international news. Now, our top story today, sources tell NDTV Profit that the first budget of the Modi 3.0 government is likely to be presented in the third week of July. Finance Minister Nirmala Sitharaman took charge for her second term in the hot seat. She spoke to reporters informally earlier today. My colleague Janani Janardhan has all the details on this.
That's right. We're hearing from the Parliamentary Affairs Minister, Kiran Rijiju, who tweeted on the platform X a little while ago about the first half or the first session of the 18th Lok Sabha session that is going to be underway from the 24th of June till the 3rd of July. Now, we do know the order of events that's expected. First, of course, the new members will be sworn in this first half of this session. These members will be sworn in, or the oath will be administered by a pro-temporary speaker. Now, also the election of the speaker is something that is going to be much awaited, much watched about. This will be the next order of events. And after that, the President of India will address both houses of the Parliament, and a motion for thanks will be passed by members of the Parliament right after that. So this is expected to fill up much of the docket when it comes to the first half of the 18th Lok Sabha session. The Rajya Sabha will also begin on the 27th of June and will end on the 3rd of July, the first session that is. Now, we're also hearing that the budget, the much-awaited July budget that will talk about the plans of the Modi 3.0 government, might be in the second half of this parliamentary session that is yet to come about. So perhaps the third week of July is what we're getting to hear at the moment. What we do know, of course, is that before the budget, we will have the economic survey presented by Chief Economic Advisor Anant Nageshwaran. But the third week of July date is just a possibility, and just that as of now. Back to you.
Janani, for that. Now, moving on, electric auto rickshaws are more in demand than electric scooters in May. My colleague Tushadip Singh has this report. Listen in.
Electric three-wheeler sales overshadowed those of electric two-wheelers in the month of May, according to the FADA data that was released recently. So electric three-wheeler sales have grown by more than 20% year-on-year, while those of electric two-wheelers have declined by more than a fourth over the same time period. So why is this happening? FADA says is due to the lack of the FAME 2 subsidy, which was reduced in June last year and was done away with completely at the end of the previous fiscal. So there There was one more scheme that was brought in, the Electric Mobility Promotion Scheme, but that is also only for 4 months. Now, FADA is batting for the new government to launch a new FAME scheme called the FAME 3 scheme. According to Manish Raj Singhania, the president of FADA, the automotive industry is eagerly looking forward to the announcement of FAME 3 by the newly formed government. We believe that will provide the necessary boost to EV sales and help increase the market share significantly. Electric cars saw a marginal decline, but there was a small increase in commercial vehicles, electric commercial vehicle sales as well.
Tushar, stay with us. Ola Electric and Hyundai India are set to go public one sooner than the other. Ola Electric looks to be the first to hit the block. Can you tell us a little bit more about that? Looks like an exciting time for the primary market, especially in the auto space.
Let's put things in perspective. The last auto company and automaker to list in India was Maruti Udyog in 2003. That company itself is known as Maruti Suzuki India Limited. So you must know how long it has been since an auto company has listed in India. So now Ola Electric has received approval from SEBI to launch its IPO sometime in the next month. The listing will be happening in less than 1 month. That's what sources at Ola Electric are telling us. The company will raise about 7,250 crore rupees. That's about $850 million. That's actually higher than the 5,500 crore rupees that the company had proposed to raise when it filed the DRHP in December last year. If Ola Electric lists in the next 1 month, it will also be the first pure play electric vehicle maker to list in India. Now, going to the other spectrum, going from two-wheelers to four-wheelers, Hyundai India is also planning to list sometime later this year, by the end of 2024. But the IPO papers may get filed in the next 2 weeks or so. That's what Bloomberg is reporting, and that's what sources have also indicated to us. So essentially, the company is looking at a valuation of about $25 billion. It's seeking to raise about $2.5 billion, which will make it India's biggest initial public offering since LIC a few years ago. So essentially, a very exciting time for the auto space ahead.
Thank you so much, Tushar, for bringing us those details. Now, let's head to the markets now. After hitting record highs during the day, the Nifty and the Sensex shed those gains in late trade. My colleague Hersh Sayta is joining us for a quick market wrap. Hersh, over to you.
Well, the benchmark, which has opened and went constructively higher through the day, has pared gains a wee bit, up about 0.25%, so no complaints there. We've closed above 23,300, so that's the positive, 60 points up in trade. Let's pull up the heat map, see where those gains have come from, and we'll go to contributories very, very shortly. But look at some of the names, especially in the power space, some bit of auto and NBFCs, SBI Life, Shriram Finance and Bajaj Finance is what you'll see in that pocket. And what you're seeing on the bottom rung of that chart is you're seeing a lot of consumer names, and you're seeing the likes of an M&M and an Axis Bank as one-offs maybe. But you look at the other name which has stood out, Ultratech Cement up 1%, possible price increase in cement reported by Motilal basis their channel checks. That has probably kept Ultratech, in focus. We also had a Citi note highlighting that Ultratech is their top pick. So 1% higher on that one. But let's pull up the contributories because we'll see where some of the bigger gains have come from for the Nifty 50. Well, nothing big really, essentially. Just a bunch of small gains made. The heavyweights just contributing about 9 points each, 9 or 10 points each, Reliance and HDFC Bank. But L&T contributed a bit, and Power Grid really stood out because for a weightage that low, it's contributed roughly 8 points. Even among